bank stocks wrapping up 2019 with a bang. JP Morgan touching a new all-time high today, while Citigroup hit the highest level in nearly 2 years. Both stocks gave up those early gains to finish the day in the red, though. And despite the losses, our next guest says we're about to embark on a, quote, golden decade for the financials. Let's bring in Mike Mayo. He's the senior bank analyst at Wells Fargo Securities. Good to see you.
Thanks for having me.
There you go. I don't mind waiting a second for it. Golden decade, why?
Well, this is the golden decade of banks and technology. And let's pull the lens back here. The 1990s, you had record bank consolidation, and they never integrated the systems. In the O's, you had excessive growth, and that ended in tears with the financial crisis. This decade was the cleanup from the financial crisis with all sorts of de-risking and deleveraging. Now, finally now, 25 years after national banking was first permitted, banks can leverage their scale, their more prudent growth, along with technology that's better enabled for banks than ever before, and banks are more receptive to using technology than ever before. So tech is the enabler. It's going to take banks on this multi-year trend of improving efficiency, better returns with a lower risk profile that's still being underappreciated by the street.
Who underappreciated? I mean, the people have been buying the heck out of these things.
Pull the lens back. You've had 2 lost decades of bank stock performance. Bank stocks underperformed this decade by over 20 percentage points. So yes, 2019, was a recovery, and we think that's just a taste of the decade to come.
Who's doing it the best? Who's got the technology thing down the best? You have outperforms, I think, on all of the majors.
And I've talked with you a lot and been on your shows here a lot this year. And our top 3 names, stay with the winners, ahead. So Citigroup, Bank of America, JP Morgan. That doesn't mean Citigroup's doing it the best. JP Morgan, talk about a best-in-class bank. JP Morgan's killing it. Bank of America, talk about fintech. Bank of America is one of the best fintech players around. So those 2 are doing it the best, but Citigroup is still our favorite because it's just so inexpensive and they're buying back so much stock. And Citigroup, just like the entire banking industry, is still underappreciated for the risk reduction, the sustainability. All these times we go on your shows and people have concerns about recessions and rate risk and regulation and spotty growth. And look what the banks did. Look what those 3 big banks did this year, especially in the third quarter, grew revenues faster than expenses. And when you do that, great things happen.
What about the more traditional investment banks, Goldman Sachs, for instance? Obviously, it's outperforming the market this year. It's up 37%. It's still down 15, 20% from its 2018 highs. Consensus has 10% earnings growth, 5% sales growth, trades 1x book. Why is this thing stuck in the mud on a relative basis? JP Morgan makes new highs. Do you see an opportunity in a bank that, has obviously got a couple headwinds, the one MDB that
needs to start growing again?
Yeah. Well, right? look at trading for the decade. Yeah. Trading for the big investment banks for the decade declined by 1/4 to 1/3, depending on your starting point. Capital markets revenues for the last 5 years, you know what they've grown? 0. They have not grown. And in our forecast, we don't assume a whole lot of growth ahead. Having said all that, we do think Goldman Sachs is better positioned now with their new CEO, David Solomon. We think they're going to put their legal issues with 1MDB behind it. Our estimates are above the street for the quarter and for next year. And they're having their first investor day in their 150-year existence at the end of January. So
Mike,
a lot of things happening with Goldman Sachs.
When you did your chronology, where I stick on is we've had the most deregulation and the most tax cuts in the last couple of years. Why would it get better from here? I hear it's the digitized or digital era, but how can it be any better of a backdrop than it's been?
Well, look, I think banks are not getting credit for what they've already delivered. Every quarter and every year that banks deliver, consistent returns, they regain some of that trust that was lost. So what we're looking at is big and boring is beautiful for banks, and that's not appreciated for the sustainability element.
How much do the leaders of these banks matter for your golden decade forecast? If I was to say, well, What's the likelihood that Diamond, Moynihan, Gorman, and Corbat are going to be running these institutions for the next 10 years? How would that factor into your outlook?
Well, I would put cells on everything. If you said the same people are going to be there 10 years from now, no matter what. I mean, we need to hold. The biggest risk for the banks is complacency. I mean, this has been a period of several years in a row of consistent results. And don't confuse brains with the bull market. All right, so everyone should be worried about the next recession, the next crisis, the next bad loan, the next bad trade. So I don't assume any one of these CEOs will stay around longer than the current year. If they don't perform, they deserve to go, just like any employee that works at one of these banks.
Part of my point, though, is if none of those four were running these institutions, would you have outperforms on all of them, or would that factor into the way you rate the banks as an analyst?
Let's look back at the last decade and give a big thank you to the regulators. The regulators have hardwired the banks for greater safety and stability. So all that crazy stuff that was done before the financial crisis, I'm not saying it's all gone, but a lot of it's gone. So part of this is just a machine that keeps running and running and running when you're the likes of JP Morgan and Bank of America. That's a tribute to their management. Now, Citigroup, there's a reason they have worst-in-class returns and worst-in-class stock market valuation, even though they did perform so well this year, and that's because they still need to restructure more. So if you're saying that it's business as usual, then we'd say you probably wouldn't have the same CEO in place in 5 years.
Mike, when you're looking at these companies, you're talking about tech. What are the technology solutions that you're most focused on for driving, this greater profitability? Is it AI? Is it blockchain? What are you focused on here?
That's a great question. I went to the Wells Fargo Securities Tech Conference. There were 800 attendees and one bank analyst.
No. You got invited to your own conference.
I actually was not.
I mean, if you said you got invited to the Citibanking conference,
I actually wasn't invited. I got myself invited.
I think he crashed.
And by the way, if you're having a New Year's Eve party tomorrow night, maybe I can come to that too, okay? So I invited myself to this tech event. And, what hit me was the solutions that are out there now for the banks. I mean, it's like paint by number tailored solutions for the banking industry. And I run into all these other attendees, and they're like, yeah, we've seen this done. We've seen this done in the retail industry. We've seen this done in the manufacturing industry. Now let's just apply it to the banks. And so we're looking at, AI. We're looking at big data. We're looking at cloud computing. We're looking at digital banking. We're looking at electronic payments. We're looking at faster processing with faster computers. And then we're looking at the governance around all of this. As Scott mentioned, the CEOs are very important. You need to have the chief technology officers in the C-suites at these banks to drive down these decisions, because so many of these technology solutions impact different parts of the banks. So you can't always go in at the low level. You need more authority to the chief technology officers.
All right, good stuff. Happy New Year.
Happy New Year to you.
Thanks for being here. That's Mike Mayo. Got a quick trade on that?
He's one of the best in the business, no question. JP Morgan has a $150 price target. I get it. It's probably headed there, but tangible book in JP Morgan is basically $60. Book value $75. I mean, it is getting rewarded more than the rest of these banks for certain, not to say that it can't go higher. One bank we've mentioned now for a while, and I think you've done it on halftime, is Blackstone. Take a look at that stock over the last 6 months. Clearly, something's going on there in BX. That's the place I would still want to be.
You have a conviction buy on Mayo?
Since day one of Mike Mayo's been coming on this show for decades.
Yeah, the guy just wandered into John Varvatos the other day and he brought up the shop or something like that.